Hello everyone, my name is Drew Kolz and I am currently a senior at Marquette University. I am a domestic industrial analyst for Marquette's AIM program, and today I am going to be pitching the stock McGrath RentCorp with a ticker of MGRC. To start off, McGrath RentCorp is an industrial company that focuses on the provision of business-to-business rental services. The company conducts most of their business in the United States and a small amount in Canada. While MGRC defines their company as having 4 different operating segments, they operate through 3 more well-known branches such as modular buildings and portable storage, electrical testing equipment, and storage of hazardous and non-hazardous liquids. The company was originally founded in 1979 and went public in 1984. They are currently headquartered in Livermore, California, and on the right there is some information about the stock and a chart of the last 12 months price history. It is recommended that the AIM Equity Fund purchase shares in McGrath RentCorp at $73.73 with a price target of $97.62, representing a potential upside of 32.4%. There are several key reasons why I believe this company should be added to our portfolio. The first being, with over 95,000 pieces of equipment and growing, MGRC is well equipped to meet increasing demand. Secondly, the company recently completed 2 acquisitions, Design Space and Kitchens to Go. Combined, these acquisitions allow MGRC to become a one-stop shop for all modular building needs. Furthermore, it allows them to expand their end markets into construction and government sectors. Behind the rise of 5G networks, McGrath's electrical testing equipment sector is also due for revenue growth. Finally, despite COVID-19 having some negative effects on the company in fiscal year 20, revenues are expected to recover as their customer market returns, and they're expected to grow at a CAGR of more than 5% over the next 5 years. MGRC recently announced that they've completed the acquisition of Design Space for a purchase price of $266 million. Management believes this acquisition is going to be important because Design Space brings over 6,400 additional high-quality modular and portable storage units. While Mobile Modular was originally known for providing modular classrooms for K-12 schools in California, this acquisition allows the company to now reach other markets such as construction and government. In addition to the increase in units, Design Space is expected to provide nearly $81 million in revenue on an annual basis. Furthermore, with Design Space estimated to produce an EBITDA margin of over 40% in fiscal year 21, management also expects to see a 5-cent to 15-cent incremental increase in EPS by 2023. Finally, this acquisition provides an additional 15 new branches in over 8 different states. The world is currently seeing a big transition from 4G to 5G networks. Because of this, 5G networks have quickly become one of the fastest growing markets in the world. These networks are desired for their higher bandwidth capabilities. However, they require proper testing before they can be put into service. Behind this great demand for these services, rental revenue for MGRC is expected to grow at a CAGR of 6.39% over the next 4 years. Furthermore, there is no expectation for this to stop anytime soon, with the 5G industry being predicted to grow at a CAGR of 29.4% and the total addressable market being predicted to reach $249 billion by 2026. As the economy slowly begins to return to normal, MGRC should be a beneficiary. Compared to last year, company-wide rental revenues have increased 10% year over year. While this is definitely a positive for the company, management has not become complacent. Recently announced, MGRC plans to increase capex spending by over $30 million in fiscal year 21. Behind aging infrastructure and growth in local enrollment in California, MGRC's biggest market, demand is expected to grow 15% in fiscal year 21. Nevertheless, Mobile Modular is not the only segment that should be relied on for the company. The older tank segment, which is known for its storage of hazardous and non-hazardous liquids, is positioned to help foster further overall growth for the company with the rebound in 2021. While historically producing $29 to $38 million in EBITDA on only $4 million in annual capex spending, Alder Tanks has shown to be a cash cow for the company. An intrinsic value for MGRC was reached by conducting a 5-year DCF model. using 2% terminal growth rate and a WACC of 6.01%, and intrinsic value of $91.01 was reached. A sensitivity analysis using a plus-minus of 25 basis points on the discount rate and plus-minus 25 basis points on the terminal growth rate produced a range of $70.79 to $124.79. Additionally, a price-to-book valuation using a 3.63 peer average multiple produced a relative value of $107.13. Finally, an EV to EBITDA valuation was conducted. A peer average multiple of 14.14 resulted in a relative value of $107.92. By weighting these methods 60-20-20, a price target of $97.62 was reached, giving this company a 32.4% potential upside. Next, we have the investment risks. Given MGRC's success relies heavily on the oil, housing, and electronic testing industries, MGRC may show adverse effects in the revenue if the economy suffers a downturn. It is also possible that any piece of rental equipment may be worth less than the depreciated value at the time it is sold. Finally, all of McGrath's products are manufactured by third-party companies. If these companies are not able to deliver the desired amount of product on time, MGRC is subject to financial repercussions. Finally, we have the leadership team. The years listed highlight the time spent in each of their current roles. Joseph Hanna was appointed President and CEO in 2017 after serving 14 years in numerous positions throughout the company. He holds previous experience working sales and operational leadership positions at SMC Corporation of America. Keith Pratt is an Executive Vice President and CFO and was also appointed in 2017. John Skineski is a VP and Division Manager of TRS RentCorp. He has been with the company since 1995. The company also has a diverse board of directors, with currently 3 out of 8 being females.